Good afternoon, everyone. Welcome to Thailand's monthly set strategies for the outlook and stock pick in the month of June. The Thai stock market seems enjoys bullish on the month of May. It's better than our expectations. Obviously, there was no sell in May happens. And what would it be in this month? We think the higher the markets go, the more cautions it should have, as we can see that a lot of uncertain factors, particularly from the external front, might be concluded this month, such as the Fed rate hikes, the oil production fees deals, ECB news, economics measures, and even the Brexit issues. However, we still wait a lot on the external front, as we think the market attentions would turn to the U.S. Federal Reserve rate hike prospect and the global oil price volatilities. For the U.S. FOMC policy meetings, which will be held on 14 to 15 June, we think the FOMC may pull the trigger on its next interest rate hike in these meetings. But the futures implies the probabilities on the Fed's fund rate is still below 50%, as shown in the figures, which the Fed's fund future rate implied, as it's still below 50%, even it's shift up quite a lot from the mid of May. So in our views, in the July policy meetings, maybe Fed's rate hikes could be shift to the July policy meetings if the U.S. economic data along the way is not as strong as thought, and there are more global economic issues that may derail the U.S. economic recovery. But on this issue about the Fed rate hikes, we still think it could happen in the second half of 2016. So a little bit summarize for the impact to Thailand on the Fed rate hike. In terms of economies, we think it would be a positive point to our export on the baht depreciation trends, while the U.S. is one of our top trading partners, accounting for around 10% of our total exports. So that would be positive to our economy in the second half of this year. But in terms of financial market, we think it would be a little negative in short terms on the concerns over foreign fund outflow. The foreign flow had left Thai stock markets during the mid of 2013 through 2014, and it seemed no real inflow coming back ever since, in consequence of uncertain politics and economic conditions. So right now, the percentage of the foreign holdings in Thai stock markets has been dropped below 5-year average already. So that means the impact from the regional foreign fund outflow on concerns over Fed rate hikes should be less than other peers, should be less in Thai stock market than other peers. So that would be only a slightly negative in short term for Thailand. Another important factors from external front is the volatilities in global oil price. As this month we will have the OPEC meetings that will be held on the 2nd of June. Even though it is likely to keep its oil output unchanged at these meetings, the prospect of whether another potential production freeze deals among OPEC and non-OPEC oil producers could be back on the table seem to be the main point of interest for the market, especially after Iran's oil production has risen to near the pre-sanctions level of 4 million barrels per day. However, a steady rise in oil price may raise the prospect of the resumption of shale oil gas productions after cost seems near to its break-even point, which would be around $40 to $50 per barrel. So that factors might put a risk on the oil price rallies. So we expect to see the high volatilities, but with the upsides quite limit for the global oil price. On the other hand, about our internal fronts, we think the most important factors would be the progress in the government projects. Actually, for the next few months, the markets expect to see more progress on the government investment projects, such as the Orange Line electric train route is slated to be put up for the bid this month in June. And for next month, the Ma Kabau and Jila Junctions double track railway route is expected to be start or kick off for the bidding process. So that would be the positive news ahead in the few months ahead. So in sum, for Thai stock market outlook in June, we expect to see a elevated level of volatilities will largely triggered by the external factors. A close watch should be kept on the foreign fund inflow against the backdrop of a weakening trend of the baht. On the domestic front, much of the boost would continue to come largely from the government stimulus measures, but any delays may possibly knock the market into collections mode after the set index forward PE has risen above 15 times. Its normal traded range over the past 5 years, and also the year-to-date cumulative proprietary inflow into Thai stock market remain exceptionally high, as shown in the chart right here. So in this sense, investors should watch out for the possible market sell-off if there are negative surprises coming. So support for the set index is pegged at around 1325 and 1385 points, and the resistance at 1440 and 1485 points for this month. For the investment strategies, we still think that government policy and tourism recovery still be the major or the key investment theme for Thai stock markets. So we have kept Siam Cement, kept Shaw Gan Chang, kept Pruksa Real Estate, Asifa, CPR, and Siam Wellness for our model portfolios, and also add AAV or Asia Aviations, Bangkok Chains Hospitals, and BJC Heavy Industry for the government's infrastructure project themes for this month, and also add Bangchak Petroleums to this month's model portfolio on the outlook brightens for second quarters on crude oil rebounds. And last but not least is the speculation themes. There may also be a play on the Set 50 and Set 100 index review stories that due to be announced in the mid of this month. So this is the potential additions and deletions from the index reviews, both set 50s and set 100 index review. So please note that that speculation normally emerges around 2 weeks ahead of the index review announcements. So next would be the detail of each stock, which I will transfer for my colleague to give you more details of each.
The first one would be the AAV, is the airline company, and we think in the outlook is quite good due to the rising passenger traffic, as well as the good management on the fuels or cost. On the passenger traffic is remain good. The growth momentum is set continue in the second quarters. After a solid growth of 17% year-on-year in the first quarters. The data from the Tourist Authority of Thailand show the international tourist arrival to Thailand increased 9.8% year-on-year in April. And also and the trend is confirmed by the data from the AOT, which display the passenger traffic grew by 10% and 13% in April and May in the 1st of May to the 1st of May to the 21st of May. On this basis, we think the passenger traffic growth in the second quarter is more likely similar to the first quarter. On the other side, we see the low oil prices still a major earnings booster, and look at the oil price is even though it went up on the Q-on-Q, but on the year-on-year basis it show a significant decline, and also the company is already locked in by using the hedging strategy. 76% of its second quarter of 2016. Also in the second half they already in the position of hedging position about 73%. So this all of this is ensure they have a good management on the oil costs. In the same time, the company is expand the fleet. In this year, the fleet is they will increase the aircraft by 5 aircraft. At the end of this year, the fleet is come to the 50 aircraft, and in the next 5 years, the fleet will go up to the 70 aircraft, and the fleet expansion will increase the flight frequencies and add more new routes to the networks, and the profit. We expect the profit growth 75% year-on-year in the 2016. We have a buy on the AAV. The target price 7 baht a share. The second one is the hospital company, and we see the BCH still have a very good growth outlook. In the second quarters, we see the revenue from hospital will go up sharply than in the first quarter. This is mostly due to the number one, the improving the outlook for the hospital in the group. Its name is World Medical Centers. It has a very good returning of the Chinese patient after the Chinese New Year festival. Secondly, the supply growth prospect for the network hospital is it increased by the A class and the social security patient volume, and on the World Medical Centers right now, the financial position is very close to the break-even point. This is due to the company has continued to have a cooperation of the medical team from the Chulalongkorn Memorial Hospital. So that will bring in new customer into the World Medical Centers. It's also they have special arrangements with more countries such as the Quarters, Russia and Australia. And with all of these, we expect the EBITDA margin will come back into the positive territory in the third quarters of this year. And with a strong patient volume growth and also the close to the break-even point of the World Medical Centers, we see the BCH to post the net profit growth of the 29.5% to around 683 million baht. We have a buy on this one by waiting on this one with a target price 12.5 baht a share. The third one is the refinery companies. We see the outlook brightened in the second quarters. After the first quarter, we have quite a bad quarters due to they have a 45 days overhaul shutdown in the first quarter. But in these quarters, we see more smooth in the operation, and now the operating rate or the refinery running rate is come back to the 110 kbd from the 64 kbd during the first quarters. And the second one, we see potential the inventory gains, and this is due to the oil price is rebound. This is from the supply disruption in the global, in the many countries in the world. And now we are looking for inventory gain in the second quarters. This is more likely to offset the weakness in the gross refinery margin. And lastly, we see they have the biodiesel plant. The second one will have a capacity to come in. The new capacity to come in the third quarters. The new plant will increase the biodiesel production capacity, and also they are planned to list the renewable power generation from the BCPG in the Tribals in the second half of this year. More likely, what we call the rating, we call buy on this one mainly because in the significant improvement in the second quarters from the first quarters. With the target price 35 baht a share, we rate buy on BCP. The last one is BJC HI, is the contractor company. Even though the potential value of the new contracts win in this year may drop back to 6 billion from the previous forecast of 9 billion, but they will have more good news in the second quarter and third quarters in terms of the possible contract wins and the pipeline of the future contracts, as well as a good news from other projects that has not been included in our forecast. And look at the share price. We see the recent decline on the share price. This is more likely be hit by the delay of the bidding project of the new project, and also the political crisis in Brazil. And now the share price go down as much as 17%. We see the current weakness in share price as a good opportunities for the investor to get in. And as we see the new catalyst for the contract bidding in the second quarter and third quarter, and also the greater more clear on the future project in the pipeline. We have a buy on the BJC HI with a target price 7.5 baht a share. That would be all for our monthly call for this month. Thank you for your attention, and we will see you next month.